Joining us right now is Potomac Wealth Advisors President and founder Mark Avallone. Mark, it's great to see you this morning. Thanks so much for joining us. First, explain to me what was going on yesterday with markets really seeing what had taken place in Iran and little by little completely reversing course. By the close, actually, markets were up. Is this a factor for the markets or not?
Well, yesterday's move reflects there's the strong appetite for stocks. Look, after a virtually uninterrupted fourth quarter of gains and a new year, we thought maybe we'd see people taking money off the table, especially with these elevated valuations. And the Iranian crisis, the Iranian events, gave us a great opportunity if investors wanted to sell down this market. But after a day and a half, investors came back in, and that is an incredibly bullish sign for buying appetite to return under this environment.
Yeah, I mean, see, that's the thing. I mean, you got such a backdrop here in terms of unemployment at a 50-year low, earnings showing growth once again. We're on the doorstep of the fourth quarter earnings reporting season. And I guess, you know, at the end of the day, if this Iran conflict doesn't impact guidance, uncertainty on the part of CEOs and impact earnings, markets are not going to care.
What was your strategy given what looked like a bullish backdrop for the market going into 2020? And has anything changed about that strategy, given the events that we've seen the last few days?
No, when you have an accommodative Fed like this, and we have year-over-year earnings growth, which we believe remain intact, and this oil scare is really nothing than an oil scare. Oil prices, the cure for high oil prices is higher oil prices. You're going to see more production come online and keep a lid on that. And if we do, in the unlikely event, have oil going up in a range, remember the U.S. produces over 13 million barrels a day. So that is a net positive for U.S. equities. So short of this really spreading, we think the investment thesis remains intact. We're going to look at a lot of U.S. growth relative to overseas still. We'd like to start putting some money overseas because of the relative valuations, but the U.S. economy is just so strong. We heard Maria mention some strong consumer data. That's not changing. We have wages up, unemployment. We have debt levels very low, but more importantly, there's optimism.
Yeah.
And when consumers have optimism, they spend, and the behavior is what's going to drive this economy right through the election and throughout 2020.
So what do you make of gold? Up about, what, 7% in a month. It is rising as a safe haven asset. It is up nearly $1,600 per ounce, the highest level since 2013. And you are looking at a rally just in the last month of 7%, Mark. Would you buy in here?
Right. Well, right, and I was looking at that, but you know, this move in gold started before this Iranian crisis. So my question really to the gold buyers out there is, well, what's the catalyst? Do you really think there's inflation? I think gold is moving a little bit ahead of itself, unless you believe there's an inflation thesis, and we don't see that in 2020. We think it could be. Look, wages were up 3.7% year over year in November. That could be some wage push inflation. If we reduce the globalization, we bring more manufacturing home from these trade deals, that could raise the cost of production. So there's hints of inflationary pressures, but not this year. So I think gold has moved ahead of itself, and we're not really big on it.
All right, we'll be watching that. Mark, good to see you this morning. Thanks so much.